morning and welcome back to Morning Markets from True Potential. Yesterday, equity markets were mixed. The FTSE 100 was down 0.5%, whilst the FTSE 250 was also down 0.6%. Over in the US, the S&P 500 was down marginally by 0.3%, whilst the Nasdaq was up 0.1%. In Europe, they were also a little bit weaker, down 0.5%, whilst Japan was very strong, up 0.9%. Developed markets were weaker yesterday. No clear catalyst, but the Delta variant continues to drive concerns about economic normalisation, with focus on dampened vaccine efficacy, reduced monetary and fiscal stimulus, and lingering supply chain pressures. Nevertheless, markets have recently been looking through near-term weakness, given the easy financial conditions, outsized policy support and stronger corporate earnings. Japanese equities continue to push higher, the 8th consecutive day of positive returns. Last week we heard that the Prime Minister announced that he would no longer be running for re-election, which the market has taken as a positive given the prospects of a new government and more fiscal stimulus. US equities finished mostly lower yesterday. However, the Nasdaq did set a fresh record high, boosted by those big technology companies such as Facebook, Amazon and Tesla. Value lagged growth again, with industrials a big decliner, with weakness in building materials. On the economic data front, we had the German industrial production data, which rebounded as supply constraints eased, a dynamic that we've also seen in China looking at the recent trade data. Industrial production rose 1% month on month versus the 0.7% expected and prior 1.3% drop. We heard from the German Economy Ministry, who discussed that while delivery problems of semiconductors that have weighed on output are likely to continue for a while, latest figures suggest that the worst may be over. Reports suggest a positive outlook due to increasing backlog of orders and low inventory. Therefore, demand should continue to be healthy. However, investors still want to see more of those bottlenecks ease in the coming months. The positive data follows Monday's German factory orders release, which gained 3.4% in July on the back of strong overseas demand. We also heard from Boris Johnson yesterday, which, as expected, outlined his plan for a rise in taxes on workers, businesses and shareholders to pay for the increased spending on health and social care. National insurance will rise by 1.25% from next year. In addition, the tax on dividend income will also increase by 1.25% in an attempt to share the burden more widely to include better off households. However, this will not apply for those who earn dividends through a pension or an ISA. In the bond markets, we saw bond yields push higher. So in the UK 10-year government bond yield push up 4 basis points to 0.64%. And similarly in the US, their 10-year government bond yield also pushed up 4 basis points to 1.36%. Commodities were slightly weaker. Oil was off 0.5%, whilst gold was down 1.9%, which was really driven by a firmer US dollar and a little bit of weakness in the US government bond market. So the pound is currently trading at 1.38 against the dollar and against the euro at 1.16. Today there are a few things we'll be looking out for. In the US, we have the US JOLTS job openings data, where 9.9 million vacancies are expected to be recorded. We'll also get the US consumer credit data and the Federal's latest Beige Book, which is published 8 times a year, with each Federal Reserve Bank gathers anecdotal evidence on current economic conditions. There is also a 10-year US Treasury auction, which may bring a bit more volatility in the sovereign bond market. That's all for today. Thank you for listening, and we'll see you again tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.